morning. It's Speaking here. Wow. Good morning, everybody. We need to talk about house hack. Wow. Come on, come below. Wow. Welcome back to Strongman Personal Finance. It's been a long time since we've done an update on house hack, my sweaty you-know-what sack. And we're going to have a good time because meet Kevin and his boyos that work at Reinvest or House Hack or whatever you call it just filed some interesting paperwork with the Securities and Exchange Commission. And we're going to go check it out and see what old meat smoker is up to, because I love tracking this man. It's so entertaining. It's so fun. And every time that I do something, he gets really pissy about it. Just is what it is, but it's fun. So let's go see what old Meat Kevin's up to with House Hack. Yeah, looks like we got some stock options coming into play. The master plan of Meat Smoker is coming together. So if you go to the SEC website, you can actually download every single report that old Meat Thruster uploads, because now that he's getting ready to go public, eventually, and I think I know what his plan is. He's got to file all this information with the SEC. He's raising capital. All you clowns and morons, you totally trust him. Just like you trusted him with the PP ETF. He did a great job with that, But trust me, with House Hack, he's going to do a good job, okay? So let's see what this recent report has to say. This was filed December 17th, 2025. That was about a month ago. House Hack Incorporated. Wow. So what's going on here? Let's see. On December 2025, the board of directors of House Hack, the company, and the sole voting shareholder of the company approved the adoption of the House Hack Incorporated 2025 non-statutory stock option plan. May I remind you that Meet Kevin is the sole voting power of House Hack. You can have 1 trillion shares, but only Kevin can vote. And only he can appoint the board of directors. He can do whatever he wants. There's no checks and balances. It's 100% Meet Kevin here. So as we see these stock options, keep in mind, he could do this again and again and again. He can issue more and more and more stock options, and he can change whatever he wants to change because he has all the voting power. And I assure you, I know Meet Kevin pretty well. If he had to change something to make money, he would do it to benefit himself. Anyway, so Meet Kevin by himself has decided to vote in this stock option plan for himself. The purpose of the plan is to aid the company in recruiting and retaining service providers of outstanding ability, and to motivate such persons to exert their best efforts on behalf of the company by providing incentives through the granting of stock options. Now, I get it, okay? If you have talent, if you have a lot of talent, you want to retain the talent, okay? There's nothing insane about that concept. So you would think, most of the stock options would go to the most experienced members of the team, the ones that are actually the heart and soul of the company, right? And there actually is one person working on the software that seems to be pretty experienced, and we'll go check him out in a little bit. But it's going to be interesting to see who Meet Kevin is giving these stock options to. And of course, he's getting some of them, of course. This is a 100% 5-year cliff, meaning even if market cap and share price targets are achieved, insiders do not earn any shares from this plan until 5 years, December 17th, 2030. And that's subject to change. You don't believe me? Okay. But anyway, as of now, it's a 5-year cliff. So you basically have to work for Meat Smoker in 5 years and hope that you meet all the targets. 5-year no-sell lockup. Even if the company goes public earlier, the executives board compensated herein are legally locked in for the long haul. Can that change? I don't know. Who has the sole voting power? Okay. But that's the rules as of now. All right, let's keep going. So they talk a little bit about taxes, whatever. Dilution protection mechanism. You're going to be protected, bro. You're protected from dilution. You're going to be just fine. Don't worry. Big Kevin's not going to issue tons and tons of stock options. No, you're going to be fine. Management only earns the majority of this pool if the company grows from its current valuation to over $3 billion. That's a pretty highly valued corporation, effectively requiring a 2,000 to 3,900% increase in value before the full dilution occurs. Okay, so basically he's saying you're protected from dilution because the targets are not achievable. I refer you to Elon Musk. The valuation of your company isn't about the actual rational valuation of your company. If you're good at shilling future, if you're a good salesman and you can convince legions of loyal fans that your company is going to mint so much money and it's going to be the future, bro, your valuation could easily divorce from fundamentals. Look at Tesla. The board of directors and the sole voting shareholder also approved an amendment to the Articles of Incorporation, increasing the authorized amount of non-voting, remember only Kevin can vote, common shares to 500 million to accommodate future reserves, none of which are issued hereby. The company has reserved up to 224 million common shares to support any stock options issued under this plan. So basically half the shares are just for awarding the insiders, it looks like, or roughly half. These grants vest after 5 years of continuous service to the company and grant the recipients the right to purchase non-voting shares of the company at 66 cents per share. Man, if I would just fire everybody like 4 years and 11 months out. Now, here's where it gets really interesting, okay? And this is where I get a little suspicious. I get a little suspicious. I'm not going to lie. Because, okay, stock options, whatever, other companies do it. It's not illegal, whatever. But it's the granting of the options and how they do it. That's a little weird to me. The company's stock price means the trailing average trading price of a share of common stock on the NASDAQ stock exchange for a minimum of 5 calendar days, as reported by or based upon data reported by a reliable reporting service as determined by the company. Okay. Here's where it gets really funny. If the company's common stock is not listed on the NASDAQ stock exchange or another exchange, then the company's stock price shall mean the sum of the AI valuation determined as 20 times the company's annual recurring revenue and an amount equal to 2 times the real estate book value. Okay, so if the company's not public, then they're going to do a valuation where they take the company's annual recurring revenue and multiply it by 20. And they take the real estate book value, which does he even know how to calculate book value? I recall factually pointing out that your valuation of your real estate was wrong on your website. Yeah, and you changed it. But I never got a thank you for that. No matter what I do, I never get thanks for anything. But, I guess me, Kevin's figure out how to actually, figure out what book value is, okay? Apparently, he didn't know before. Fact. Prove me wrong, bussy boy. Equal to 2 times the real estate book value. Okay, so 20 times annual recurring revenue and 2 times real estate book value. Well, let's go look. Let's go look at some averages, right? Because, it's partially a software company. It's got AI software, house hack, find your house hack on the app. And then it's a real estate company where he buys real estate, he fixes it up, the wedge bro, and then eventually he sells it to many funds, of course, at a profit, right? That's what the company is. So what is the average valuation of a software company with a price to ARR? The average valuation multiple for a software company is generally 3x to 10x annual recurring revenue. But this varies significantly with high growth firms reaching 10x to 30x. So, typical AAR multiples by growth stage. Early stage high growth, 10 to 15x ARR, sometimes exceeding 20x for top performers. Now, of course, Meet Kevin is a top performer. So if the company is not public, he's going to take 20x the annual recurring revenue because he's a top performer. 100% year over year growth. And he's probably getting that now. He probably is, because if you start from zero and then you start generating revenue, yeah, you get massive growth percentages. Okay. So that's Kevin. Mid growth, 50 to 100% year over year, 7 to 10x. Mature or slower growth, 20 to 50% year over year, 5 to 8x. So basically, Meet Kevin has picked the tippy top multiple for his annual recurring revenue growth 5 years from now. Okay. Now, for real estate, what is the average price to books of a real estate investment trust? The average price to books ratio for REITs varies significantly by sector and market conditions, but generally falls between 1x to 1.2x. Interesting. Indicating they often trade near their book value, though some trade below, such as mortgage REITs. Okay. Interesting. So if the company is not public, he can use 20x, which is on the extreme high end of his annual recurring revenue, or he can use 2x book value. And once again, I ask you, what is the book value of his real estate? Because he literally screwed it up on his website. Fact. And then he changed it thanks to me. Where's my payment, me, Kevin? Where's my money? Okay. So it sounds like if I was Kevin, here's what I would do. I would not go public until 2030, right? Because if you don't go public, then they have to use this other valuation tool, this other valuation, which is 20x annual recurring revenue or 2x book value. Because if the company's public, that's it. The company's public. You go off the valuation of the stock price with the company being public. But if it's private, you actually get like more beneficial valuation multiples, I think, in my humble opinion. So Kevin, you might want to don't go public until you can cliff vest these stock options, and then you go public, and then you sell shares, right? Okay, interesting stuff there. Who's calling me? Who's calling, Daddy? So that's how it works, okay? All right, so then they have different tranches. So based on each tranche, it equals the amount of stock options that you're awarded. So the higher the company's valuation, the more stock options you get. Somebody's outside in a motorcycle. Can you shut up? Anyway, tranche one, if the company's stock price is $2.37 and the valuation is $200 million, you get the first tranche. You get the first set, the first group of stock options granted to you. Then we go to tranche 2, 3, 4, 5, 6, and 7, with the highest valuation being $10 billion. So if a company has a $10 billion market cap, guess what? They get all of their stock options. So what is the revenue he needs to, let's see. So if he took the revenue of the software, let's see, divided by 20, he would need what, 500 million of revenue? That is kind of challenging. Okay. Interesting. So who's getting the stock options? Because remember, these are here to retain talent, bro. First, we have Meat Smoker. So if they reach the first valuation, if the company has a 200 million valuation, right? Let's go back. 200 million valuation. Meat Smoker gets 2.5 million stock options, right? And he could buy it for, what was it, 66 cents per stock. All the way down to if the company reaches a valuation of 10 billion, which I'm sure it will if it's private, 38 million stock options. Okay? So me, Kevin's going to get a lot of stock. He's going to get a lot. Okay. And I think these are separate. I think he would get 2 plus 6 plus 10 plus 17. I could be wrong on that, but he's going to get a ton of stock options. Okay. If he totally meets his valuation requirements, which I think he will, especially if it's private. You should keep it private, bro. Lauren Pathrath. What? Lauren works for the company? I didn't know that, Kevin. I guess she does now. Why don't you hire your kids, bro? So apparently, I mean, maybe Lauren does some stuff. I don't know. Okay. He has Lauren on here, and the highest tranche, she gets 1.9 million stock options. So, okay, keeping it in the family. If you add these up, woo! If I think that's how that works, that's a lot of stock options. So Kevin keeps the lion's share, right? I mean, he's the founder. Okay, I get it. He's getting a lot of stock options. He's making out big. And then he puts his wife on here. I did not know that she was in the company, but hey, the more you know. And then we have McKay. Okay, this kid's like 25 years old. He's giving McKay more than his wife. So what is McKay doing? Seriously, okay? Kevin, he's like the real estate guy, and then somebody related to McKay is the programmer for the software. At least I think it is. At least I think he's related to McKay. McKay gets all this huge granting of stock options. Okay, so we got Kevin's wife a little bit, Kevin a lot, McKay, some young child, 6.3 million at the highest tranche. And then we got William Stewart and Ross Gerber. Isn't Ross Gerber like the professional? So he's giving the 25-year-old like the highest award, but besides himself. Okay, right? So that's it. So I guess it's just valuation targets, right? So Kevin, I would advise you, don't go public, bro. Wait till you can get these stock options, grant yourself the stock options, and then go public, because it'll be harder being public than it will being private, because you can do whatever voodoo you want to achieve the thresholds, to achieve the valuation thresholds. And I seriously am concerned about how you do your valuations, because as I pointed out in the other video, and I proved factually that you were wrong. If you don't believe me, go watch my other videos. And he changed his website. You're welcome, Kevin. Okay, so I guess it's just based on valuation. As long as, either it goes public and the stock pumps, he can shill it, or he takes extremely high-end multiples if the company's private, and he does the valuations that way. And, of course, he awards himself the lion's share. His wife gets a little bit. McKay, I don't know what he does, but, I guess he's doing something. He gets a lot, and then basically it's Kevin and his boy McKay basically getting a lot of stock options. All right. So then he files an amendment, okay? This is funny. This is hilarious. Hold on. Because I was like, who's this AI programmer? Who is this AI programmer? So let's read this. Executive summary. So now he's changing what annual recurring revenue means, okay? Which actually helps him get closer to the target. Because if you go on the Reinvest House Hack website, you can see that you can pay for it up front. You can get like a lifetime subscription to it. Or you can probably pay monthly, whatever the terms are. But there is the option to do a lifetime subscription. And what he's doing is he's taking the lifetime subscriptions and he's calculating an imputed value to add on to annual recurring revenue. And I wonder what formula he's using for that. To accurately reflect the company's strategic shift to a hybrid real estate software model, the definition of annual recurring revenue for valuation purposes has been updated to include annualized subscription revenue and imputed values for lifetime or perpetual license holder. Because I think Kevin realized, he's like, wait a minute.
I'm giving people lifetime annual subscriptions, and if they pay up front, then I can't use that on my valuation multiple. So what I'm going to do is I'm going to have an imputed value where if somebody pays up front and pays for a lifetime subscription 5 years ago, I can actually use that to help me calculate my annual recurring revenue 5 years from now. Wow.
So he's basically making it easier to hit the targets because he's basically amortizing the revenue of whoever paid up front. I would love to see that calculation. Okay. I would love to see it. If the company's common stock is not listed on the NASDAQ exchange, then the company's stock price shall mean the sum of the software, licensing, and AI valuation determined as 20 times the company's ARR. Okay, so he's making it easier to, have that certain level of annual recurring revenue. And it kind of makes sense. Like, in accounting, you earn the revenue over time. So it kind of makes sense. Like, okay, if somebody pays up front for a lifetime subscription, sure, you can use some of that. But what I want to see is how does he calculate it? Okay, if somebody pays $1,600 up front and for a lifetime of revenue, I wonder how he's going to amortize or impute the value of that $1,600 payment. And I suspect it would probably be beneficial to him, but I could be wrong. All right. So he uses these extreme valuations, right? For plan valuation purposes, ARR shall include recurring subscription revenue annualized, plus for each lifetime or perpetual license holder who remains an active user, access the product within the trailing 90 days, an imputed annual amount equal to the company's annual subscription price. So if they access it with one time within 90 days, so if you buy it up front and then you're like, okay, this is okay, or this sucks, or I'm done with this. As long as you access the product within 90 days, one time, then they impute an annual amount equal to the company's total annual subscription price. So all he has to do, it sounds like, is to get somebody to go on the app once.
Hey, check the app, guys. I have this new thing. Wow.
Somebody logs in one time in 90 days, and I guess now he can count, a full years of annual subscription? Interesting. For purposes of this definition, active user means a user who has access to the company's educational products. See, I think I know what he's doing, okay? Let's say somebody buys this. And they just stop using it. He's going to try to push people to keep going back to it, even once, so he can then count that as part of his annual recurring revenue. So he might film a video, put it on the app, tell his fans, hey, check out the app. And then if you had bought this 5 years ago, but then you went on the app once to watch a video, then they can count you. Interesting. And annual subscription price means the average annualized subscription price actually paid by users during the trailing 90 days. So obviously the price is going to go up, right? So if I bought this 5 years ago, let's say I buy this now for $1,600. And then 5 years down the road, Kevin's like, look at my video. Wow. Guys, if you bought the software, go log in right now and check it out. There's a new video on there. People go on the software, right? They check out the video. They go on one time in the last 90 days. Therefore, they're counted as an active user. And then he could say, oh, well, I could take the average annualized subscription price paid by users during the trailing 90 days, and I can count that for somebody that bought this software all these years ago. I think that's what he's doing. But before payment processing and taxes, as determined in good faith by the administrator based on the company's books and records. ARR is used solely for plan valuation performance conditions, not GAAP earnings. So what, the profits not matter? Now, here's where I laughed, okay? So now they're granting stock options to the lead developer. So this is the dude that's developing the software, right? He's pretty critical, okay? To retain, and you'll see how many stocks it gets, the company approved the grant of 6.7 million stock options to Spencer Thomason, lead developer. Thomason, that's interesting. Thomason, Spencer Thomason. Let's go back and look. McKay Thomason. Spencer Thomason? McKay Thomason. Now, initially, I thought it was his brother. I think it's his dad. So now me, Kevin's hiring McKay's dad to work on it. I looked the guy up. He seems like actually pretty experienced with software stuff. So I guess that's a good thing. Okay. I was thinking, I'm like, who is Kevin hiring for this software development? Who could it possibly be? I thought it was some punk out of college, but it's actually, look, I think it's McKay's dad, Spencer Thomason. And if you go look, it's public information, but he's like he provides like part-time CTO services to various organizations. So he's basically got a part-time job where he's like, helping out Meet Kevin and his son, which, I understand that. And, and he only gives the lead developer for the software 6.7 million stock options. And the young guy, he gets like, I don't know, what is that? 11, 12, 16, 19, 21, 22, 22.5 million shares to the young kid. And then how many options is Kevin getting? Let's do the math here. This is hilarious. I wonder if I can copy and paste this. We're gonna have to do this the old-fashioned way. So let's see how many stock options Meat Smoker gets. And I might screw this up. This is why I like to copy and paste stuff usually, but okay. 136 million shares. He's getting like half, roughly, of all the shares he's set aside. Looks like more than half, actually. So that's what Meet Kevin's up to. Now, the only thing that really makes me suspicious, like, okay, we know who his software developer is. I mean, he seems experienced. That's good. What I'm suspicious of is this private valuation that he's doing, okay? Private valuation, where if the company's not public, you can just take 20x the annual recurring revenue or 2x the book value of the real estate properties, right? Those are very high valuations. Not out of this world, but extremely, that's on the higher end. Well, what qualifies as annual recurring revenue? Well, it's not only the current subscribers, but it's also the lifetime subscribers. As long as they log in one time in the last 90 days,
Go check out this video that I put on there. Wow.
that's all he has to do. One login, boom. He can count that as annual recurring revenue. That's a little weird. So I guarantee you, here's what's going to happen. Right before those stock options vest, he's going to push hard on his channel. Check out the app. If you bought it, check out the app. Check out the app. Check out the app. Check out the app. Get a free trial. Do this. Do that. He's going to be pushing it hard because as long as you log in one time in the last 90 days, then he can count that as a boost to the ARR. And then he can award himself an ungodly amount of stock options. And then he can go public. And then he can cash out. I would be shocked if Meet Kevin went public before 2030. If I was smart, clever, I would wait to go public until after I was granted the stock options. Because now I have them. Then we go public. Then I could sell and make a fortune, baby. Woo! All right, let's do some member-only comments. Good morning, strong man. How's it going, Mohammed? Hope you're having a wonderful day. Busy season is crazy. I'm working on 2 corporate returns now, but it really hasn't picked off that much. Most people don't have their forms. They don't have their tax forms, so I'm just hanging out. But the corporates are starting to roll in because you can start those pretty quick. Somebody says he hired AI developers for Microsoft. It looks like it's McKay's dad. That's what it looks like. But hey, at least the guy's experienced. Okay, I'll give him that. I know you're streaming early to avoid me. Yeah, I'm so scared of you, Alan. But in all seriousness, I applaud you. Oh, a nice comment from Alan. Thank you, Alan. I really appreciate it. Okay. Don't underestimate me, Alan. You guys have no idea how busy I've been with work, kids. YouTube was a distant priority. Now it's much higher on the priority list. Hello, everyone. 20x price to sales. That's what it looks like. But it's not even sales. He can do an imputed lifetime value. He can do an imputed value if somebody logs into the app one time in the last 90 days. That's suspicious. Okay? That's crazy. What he's gonna do is he's gonna try to push as many people as he can onto that app right before those options vest. And then even if they go in one time, he can impute revenue from one login. That's what it sounds like to me. He's such a little, he's so, oh my God, that's crazy. Thank you, Chris, for everything you do. You're welcome, good sir. Kevin is completing his journeyman certificate in grifting. Dude, he is a master. He has a PhD in grifting. Allison Carlson, yes, this was to avoid us. I barely. Oh, Gillen Allen found me. Dang it. I have a weird vibe from Cashflow King's last episode, pre-recorded, not live. Look like damage control after accusations of yeah, oh yeah, Yep, Dave went down a little bit. Damage control. The rug pulling was not my own words, by the way. The own statements of the guest on the show, and just damage control on getting a bunch of people into a stock than to go down 20%. Look, if VT ever went down 20%, I'm sure I'd get a lot of trolls. You're a fraud. The stock market went down 20%. Because they don't understand, like, sometimes stocks go down, long-term investment, like they don't understand that. That's too difficult for them. What? Long-term. One bad call. But it's weird that this damage control show was pre-recorded to avoid actual tough questions. They're scared of you, Gil. They're shaking in fear.
Me, Kevin, Bid Mala, or Greg Cardone. Who's better at real estate development?
Honestly, I don't know. I'd probably go with Grant. I mean, I'm not going to invest with any of these people, but Grant has been around for a while. I mean, he's kind of grifty, but, he does have real estate. Strongman, you fool. Meet Kevin lawsuit incoming. I applaud you too, but I would have avoided Meet Kevin. Oh yeah, I read his SEC statements. Wow. Oh my God. I mean, think about it. Think about this, people. I literally saved his butt. I did. I saved his butt. His valuation was wrong on the House Hack website. I corrected it, and he changed it. Then this mother effer, he's got himself listed on his LinkedIn as a financial advisor. He wasn't. So what do? I say, hey, look, Kevin's listing himself as a financial advisor. He deletes it. You're welcome, Kevin. You're welcome. Okay? I better see 10 grand come into my PayPal. Or give me shares in House Hack, bro. So I can't do my taxes because they claim fraud. I think it's because I used 2 different addresses by mistake. They say I got to go online, which I did, but then it says I got to go in person. Huh? I'm staying out of that one, dude. Gifted one strong. Thank you. Who's the new lucky member? Yeah, but maybe Kevin should probably flesh out what he means by like that imputed revenue. If you log in one time, like show us how you calculate that, dude, because that's weird. That's very odd. All right, hold on. Let's see who the new lucky member is. Thomas Crown, 5953. Welcome to the membership. Say thank you to Major General Tao. We should start a publicly traded company where we just sell our own stock. I'm going to start a YouTube company, and my valuation is 1 trillion times my annual YouTube revenue. And if anybody super chats me, right? If you super chat me one time, I assume that you'll continue to super chat me for the rest of the year, and we multiply that super chat by 12. And that is the imputed revenue from that super chat. I never said rug pull, you guard. I can't do Saturdays because of church and family. You're just scared of Gil. That's the only explanation, Andrew. You're just terrified of the Gilmeister. If VT goes down 20%, then other things will be down a lot more, though. It won't matter. It won't matter. VT went down. I'm a fraud. When are you going to play the piano? I love Chris, a.k.a. Dodero. He's so handsome and jacked and yoked. La, 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 la. I think you misunderstood what I said. Watch Silver Tank. You were wrong on your Bitcoin advice. Will you admit if you were wrong on silver? Strongman, can I write off gifting subs and memberships? I think if you're advertising your business, like if you had your business as your channel name and you were trying to advertise your business, it's possible, yeah. But if it's just like a private account where there's no like justification that you're advertising, then maybe not. So I'd maybe change your channel name to your business name and then shill your business in the super chat. And then it's possible. Then we can talk about it. I am 2x gold futures. I put in 50K now. I'm up to 100. Am I thinking of exiting? But numbers keep going up. Should I exit? That's up to you, dude. I know what I would do. Okay, Gil, I'll 10x short silver. It's not silver, but I guess I suggest you still sell. Okay, that's Gil's advice. That's not so bad. Meet Reina, for the love of God, please sell. I mean, hey, if I made 3x, I know what I would do. I'm out. Institutions are selling metals and about to rug pull. All right. Well, thank you all for tuning in. Please like, subscribe. Consider joining as a member to support the channel. Thank Major General Tao, my new lucky member. What's your name again? Thomas Crown 5953. Thank Major General Tao vociferously. Like, subscribe. Consider booking a free 30-minute tax consultation with me. I am a certified public accountant and would gladly do your business and or personal taxes any state in the United States. You can talk to me for free. I give you upfront fixed quotes, and I'll do your taxes like a boss. Cheers. Oh, hold on a minute. Am I invisible? You didn't read my question. You got to either super chat or become a member, bro. That's how this works. Give me money now. I'm hungry for your dollars. Give it to me, daddy. Bye, everybody.